You want to know about Lenme? You see this app promising you passive income, telling you that you can become the bank and lend your hard-earned money to everyday people for a nice, juicy return, and you think, wow, Susie, maybe this is how I outpace inflation in my retirement. Or maybe you're on the other side of the coin, and you need a quick cash injection to bridge a gap, and you are looking at Lenme thinking it is a safe alternative to credit cards. Listen to me. When you are retired or when you are standing on the edge of retirement looking at the rest of your life, the rules of money change. They change completely. You no longer have the luxury of making massive mistakes because you do not have a monthly paycheck coming in from a job to rescue you. Your job now is to protect what you have, to be smart, and to understand exactly where every single dollar is going. So today, we are going over the Lenme Lending Guide, and I am going to tell you the cold, hard truth about peer-to-peer lending apps, the hidden risks that nobody is talking about, and whether you should touch this with a 10-foot pole. Let's start with the problem. You are living in a world where everything is getting more expensive, and if you are living on a fixed income, that is terrifying. I get it. I understand the fear of outliving your money. So when an app like Lenme pops up and says, hey, invest your spare cash here, choose your own risk level, and earn great interest rates by funding small microloans up to $5,000, it sounds like a dream come true. You see the word investing and you think of passive income. But you have to ask yourself the ultimate question: who is borrowing this money? Lenme allows people to request loans without a hard credit check. They advertise that borrowers don't need a traditional credit score or mountains of paperwork. Now, I want you to think about this logically. If a major financial institution, a bank with billions of dollars and sophisticated risk algorithms, refuses to lend money to someone, or if that person cannot access traditional credit, why on earth do you think you should take on that risk with your retirement money? When you act as the lender on a microlending app, you are taking on unsecured debt. Unsecured means there is absolutely no collateral. If that borrower decides to delete the app, change their phone number, and walk away from that $50 or $500 or $5,000, guess what? Your money is gone. Lenme is just the marketplace. They're the middleman connecting the dots. They do not guarantee the loan. They do not insure your principal. If the borrower defaults, you lose. And in retirement, losing your principal is the ultimate financial sin. Let's look at the borrower's side for a moment, because some of you might be looking at Lenme thinking, Susie, I just need a quick $500 to fix the water heater this month, and I want to avoid a payday loan. Here's the fear and the trap you need to watch out for. Lenme runs on a subscription model. To even use the platform to request a loan, you have to pay a monthly fee. Then, if your loan gets funded, there is a 1% origination fee plus the interest rate that the investor charges you. Do you see what is happening here? You are paying money just for the chance to borrow money. There is absolutely no guarantee that an investor will choose to fund your loan request. So you could be down money on a subscription fee and still be sitting there with a broken water heater. Furthermore, users across the board have complained about glitches, poor customer support, and the difficulty of getting in touch with a real human being when things go wrong. If your bank account is connected to an app and you cannot reach customer service, that is a massive red flag. I want you to take a deep breath and realize what peer-to-peer microlending really is. It is a high-risk gamble masquerading as a high-yield investment tool. If you are an investor looking for passive income, your number one priority right now must be safety of principal. You cannot afford to play loan shark with $50 increments, hoping people pay you back so you can make a few percentage points. If you want yield, you look at safe, guaranteed buckets. Look at high-yield savings accounts. Look at certificates of deposit. Look at treasury bills. In today's financial climate, you can get safe, predictable returns without ever worrying about a stranger defaulting on a microloan. It might not feel as high-tech or exciting as a smartphone app, but it lets you sleep at night. And peace of mind is the highest return on investment you will ever achieve. If you are a borrower looking for short-term help, do not rush into apps that charge you subscriptions just to ask for money. Look at your local credit unions, which often offer small-dollar, low-interest payday alternative loans with actual human customer service. Look at family, or look at cutting expenses immediately to build a small cash cushion so you never have to be at the mercy of an app's marketplace algorithm. Do not let the sleek design of a fintech app blind you to the age-old rules of money. If it sounds too easy to borrow, it is probably a trap. If it sounds too high-yielding to lend, the risk is likely higher than you can afford to bear. Be smart with your money, protect your principal, and stay safe.